Better than expected results from TSM, didn't necessarily turn the winds in favor of the big technology stocks at yesterday's trading session. Investors have mixed feelings at the end of a week that saw a severe drawdown in big technology stock prices. So we have a light economic calendar today and heated discussions about the possibility of the President Joe Biden giving in to the pressure to leave the presidential race as soon as this weekend. So welcome. This is Swissquote's Daily Market Talk. So TSM announced better than expected quarterly results and lifted its growth projections for this year's revenue yesterday. Good news, helped limiting the previous day sell-off in chip stocks. That was triggered by news that the Biden administration would impose more restrictions on allies' chip and chip equipment exports toward China, remember? But couldn't really prevent the S&P 500 nor the Nasdaq 100 from closing yesterday's trading session lower than where they started. The S&P 500 fell 0.78% yesterday, while Nasdaq 100 lost almost 0.50%. Nvidia rebounded more than 2.5% after the strong TSM results revived the AI optimism despite the growing worries of worsening chip war between the US and China. But TSM was not in demand in Taiwan today because its shares lost 2% in the Taiwan Stock Exchange, as besides the sharp sell-off that hit the market earlier this week, it is said that the euphoria around the AI stocks diminished as Goldman Sachs warned earlier this week that the biggest US technology firms that drive these chip revenues higher while maybe spending way too much on AI without necessarily having a guarantee that they will see their investment bear fruit in a sufficiently satisfactory timeline. And some say they will never ever see these results. So the rising odds of a Trump presidency in the US is not necessarily positive for TSM either. In the particular case of TSM, as Trump looked barely willing to defend Taiwan in case of a Chinese aggression. Moreover, a Trump and Vance duo in the White House from November on is good for technology stocks, but only the small ones of them, and should not necessarily benefit to the big technology companies, it is said. And speaking of US election, Joe Biden is under an unbearable pressure to leave the presidential race because he's simply too old. Now many Democratic heavyweights are now turning their back against the president, and even ex-President Barack Obama said Biden should consider stepping down. And there are actually rumors right now that Biden could even throw in the towel as early as this weekend. So if that happens, we could eventually see what we call the Trump trade gain further momentum. So that would benefit to Bitcoin, equities, especially the small and domestically focused equities, and also could cause a yield curve steepening with the long end of the US Treasuries feeling the heat of exploding debt under another Trump presidency. Now, some people ask me, how long do you think this Trump trade will last? The answer is, I think it will last a few weeks, maybe a few months. Time to, give the non-technology pockets of the market to catch their breath and technology companies to maybe correct following a breathtaking year and a half rally. But in fine, note that factors like the Federal Reserve and other central bank monetary policy decisions, the race and stuff, the global trade tensions, the global growth prospects, China, climate, and idiosyncratic factors like AI, for example, should say the last word on the overall direction of the US and international stock markets. For now, the reflation trade, for example, favors the small caps in the US and a shift toward the European equities. Last, European stocks kicked off the earnings season on quite a meager note with weak results from luxury and airline sectors in Europe. I know that it's very, very early to predict where the earnings season will go for the European companies, but the European Central Bank's first rate cut, well, is normally expected to have lifted sentiment for many, many European companies. But the European Central Bank is not confident that September will bring the second rate cut in the Eurozone. And they don't want the market to think that, well, there will be a 25 basis point rate cut to be pulled out from their head at the end of summer. So this is important. The European Central Bank Chief Christine Lagarde said at her press conference yesterday, after the ECB decided to hold the rates steady, that options for the September meeting remain wide open, but the decision will depend on data. So yet the euro dollar sank below the 109 level yesterday, as if she had given a stronger signal for a September rate cut. And that's the risk, in my opinion, given that if the rate cut expectations go ahead of themselves, and this is exactly what seems to be happening on both sides of the Atlantic Ocean right now, an eventual retreat in these rate cut expectations to match a reasonable level could eventually hit sentiment and risk appetite. So that's the risk. So what caused that? Well, the PPI numbers last month came in higher than expected in the US, remember? The market didn't react it, but that was the case. Then I see more reports right now highlighting the rising shipping costs due to the mess that we have in the Middle East and in the Red Sea. The freight costs and insurance bills are exploded by 300% since past year. It is a lot. Now, these shipping costs stand for only around 3% of the overall price pressures, had said the ECB chief Christine Lagarde member in one of her previous press conferences. But combined with, the risk of higher tariffs and worsening global trade prospects, well, it makes all this picture for the future quite uncertain for inflationary pressure. So yes, the Stoxx 600 is assumed to be a good choice for the reflation trade and could eventually extend gains, but I'm not sure that the early earnings that we saw from the European companies justify a move toward fresh all-time high levels. And a waning appetite for the European equities could spread butter on the bread of the US equities, but for the major US indices to continue to outperform as they did since last year, well, the projected sector rotation that could hit the technology stocks, well, shouldn't hit them too much, because the other sectors, the non-technology sectors, could hardly make up the kind of losses that we saw earlier this week in big technology stocks. So, just saying. Anyway, speaking of these big technology companies in the US, Netflix added more than 8 million subscribers in the second quarter of this year, beating its own forecast and also widening gap with its rivals. Yet the share price slipped in the after-hours trading after the third quarter sales forecast from the company missed analyst estimates and it rebounded. So at the end of the day, well, Netflix shares didn't move much in the after-hours trading. A rotation from technology to non-technology names as a result of this Trump and softer Fed expectations could eventually weigh on Netflix in the coming weeks, as it is a technology stock, and pull the stock price lower from near all-time high levels. But happily for Netflix, it's got a limited exposure to AI and may better weather a potential AI sell-off than its major peers like Nvidia, Apple or Google, for example. Anyway, this week ends with a relatively light economic and earnings calendar for today, but the heat will be mounting from next week with more earnings due to hit the wire, with big names like Tesla and Google due to announce their second quarter results as soon as next week. So this is all for this week. I'm İpek Özkardeşkaya and thank you for joining me and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions and your questions below as usual. Follow us on Instagram, on X and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again next week. And until then, good day trading and have a lovely weekend.